Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of gold XAUUSD. Thanks for joining me here. My name is Vic. So gold had a huge move last week, but if you look at the higher time frames, actually not much has changed. So you must trade what you see. So even though there was large move, and if you were able to capitalize on that, that's very good. But you must look at the higher time frames to find the overall picture. So this is what we have. Let's quickly revise. I'm not going to go through entire thing because you can always go back and refer to my previous analysis, where gold is and what it can happen. I have explained that several times in my previous analysis, and everything is recorded on the channel. But let me actually quickly tell you that we are having we have this W pattern here, right, on a multi-month or multi-year basis, and then we have this consolidation happening right now, kind of like in a channel to the sideways or whatever call it. Some people, few traders or analysts, will say that this is a cup and handle. Okay, that's also fine, but the way we treat we analyze the market is we use Fibonacci's, and we have number backed system which we call as FCP analysis. Now cup and handle may not be quantified, but WNM patterns can be quantified using Fibonacci's and everything. So we tend to see WNM patterns in the market. So the market is still kind of doing this, and it is still going down, and it may actually reach the 1550 or 1570 level. If you want to know more about why I'm saying is that you should refer to one of the previous analysis. You'll find the link to that in the description or the suggested video of this video. Okay, so that's what we have on multi-year basis. Now let's go to the weekly time frame. On weekly time frame, as I've been maintaining, that market is still consolidating to the sideways, but my bias on the weekly time frame is still bearish, and one of the reasons is the VATA Envisage. Now VATA Envisage is a tool which actually helps you in analysis, and it can also give you signals, entry signals, and stop loss, and profit target guidance as well. So on VATA Envisage, what we see is that the water trend is negative. It's basically red, which means the bearish is still bearish. And we see that the water curve, which used to be bullish, this used to be blue. Now it has been bearish for quite some time. It is red in color, and when it is showing red in color, that means that the market momentum is bearish. A higher time frame momentum is still bearish. So if this is red, if this is red, and if water wave is also red, then I'm going to prefer my short positions more. That does not mean that I cannot take long positions. I can take long positions if the opportunity is there, but I will prefer my short positions so that and I can go for extended profit targets. Okay, that's how it should be. So far, because everything is red, I'm still preferring my short positions. I have been long, I can go long, but I will prefer my short positions, that I know if I get an opportunity to go short on, I will take that, and I will try to go for extended profit targets in that scenario. Okay, so that's what my opinion is on gold, on weekly time frame, on higher time frame. Let's go and look at the chart once again. Okay, so this is how it is looking. Now what you can simply see that the market is still creating lower highs, right? And so far I mean, before that it was creating lower lows as well, but this was kind of double bottom. Now you must remember that when the market creates these equal lows or equal highs, these are kind of liquidity area. I've explained that previously in my previous analysis as well. So market can, and sometimes it is kind of understood that market makers will try to come below that area to collect the stop losses and all that, because majority of the retail traders will think that this is a strong support. When they say strong support, that means it's a liquidity area that becomes very good stop loss collection zone for market makers. So if market starts to continue to fall down, then this 1681 level is ultimately is going to be a kind of target area for market makers to collect the stop losses. So I can expect market to go slightly below then and then start to move up again. So that can be one of the scenarios. Another scenario is that if the market actually breaks through this level and performs the retest and whatnot, right, and then continues to fall down, then you will notice that we will have this M pattern, and which can actually bring us down to near about in 1500s or so 1550, 1570, even lower than that as well. And we have few gaps available around there as well, so the market can complete this M pattern. Now this is on the weekly time frame. So remember, it can take weeks, it can take months as well, um, but you must look at the higher time frame to find the bias, the context of the market. If I go to the daily time frame, what has been happening is this is what I presented and posted several times already, and this is why I did not post the analysis last week, is because there was not much actually changing. So you see we have this head and shoulders pattern which has actually developed, and this is the neckline, and the market actually came below that neckline, collected all the stop loss. Why? Because this became a liquidity zone. This was kind of equal lows, so the market fell down below that and collected stop losses and then started to move higher. In this process now, it has created a kind of bull trap. Market makers try to create traps on both sides. So when it was falling down, a lot of people thought, yeah, this is bearish now, let me take the sell position, and they got stopped out, market went higher. Now people are thinking that it is bullish. Now they'll try to make a bull they'll try to take long positions, and then it is expected to fall down once again, because on weekly it is still bearish. You can see we have come exactly into the same level previously, so this head and shoulders pattern is still valid. The only thing is which has not happened yet is the break of the neckline. So if the neckline is broken, then we are looking for downward moves into this. And I explained that in the previous analysis. And I have already also posted this in the Telegram channel and Twitter and other places. If you are not following on me on Twitter, then you are probably missing out, because I'll be pushing more exclusive content onto Twitter. And I you are also welcome to join our free Telegram channel, which is right there, and you'll find the link in the description of this video. So this is what has happened, right? So I said on 15th of December, just before the huge move to the downside, just below that, just before that, because I was expecting that move. I said, okay, this area was supposed to be cleaned up, and I was expecting this thing to happen, three like 2 or 3 weeks ago. I knew that at some point in time that the market was going to come back down into 1953 or 1753 or 1761, this sort of area, because we had three gaps left, and this sort of bad behavior, this is bad price action. So market makers usually tend to come to clean that up. So this is what I posted as a warning. I said, this could be happening very soon. And then gold started to fall down. It closed the first gap, okay? But that price action was still there, so it could fall further down, and then it fell further down right into 1753, and 1753 target was already given in the previous analysis, which was mentioned here in the previous YouTube video. So you should check it out to find how I was able to find that. And there is a lot of educational content in there as well. Now after that, I also mentioned that there was no break of this neckline on the daily time frame. The market fell down and went back up, so this head and shoulders pattern is still valid. However, we never had a confirmation. If we had a confirmation, then it could have actually fallen down to 1722. We could be looking for that kind of target. Now, those targets are still available to us. So if the market actually invalidates this head and shoulders pattern, if the market continues to go higher, right now it went into this 1800 or 1813 area and then started to fall down, and then if continues to go higher, because there is a gap available somewhere around here around 1854 or something like that. If it continues to go higher, then obviously this head and shoulders will be invalidated, and then we won't be looking at this target of 1722. But let's assume that if, let's say, the market starts to go down, and if it actually breaks through this neckline, then obviously these targets will open again. Otherwise we are looking for 1750. So the first one will be somewhere around 1732, and then we are looking for 1850 to 1832, and then 1854. Yeah, so those sort of areas we are looking for as target in terms of bullish movement. Okay, if it actually goes and goes above this and closes beyond 1813 level or so, there is very important level. Let me show you that. There is a very important level which is around 1806. So I'll come to that in a second. So what happened after that? Market fell down to this, collected all the stop losses, closed the gaps, cleaned up this price action, right, and started to move higher. There was a gap left around 1801, and I pointed that out in advance, like before it was able to reach. I said like the gap was left around 1801, so market could reach there, and if it continues to go higher, then the next one was going to be around the next level was obviously 1806, right? And we also had this level marked 1813. So 1806 is a kind of level that we have been monitoring for months. We knew that the market makers have been using this sort of area for it's kind of like pivot. They have been going up above this and coming back to it. They have been going below this and coming back to it. So it has become like kind of pivot zone for them. But we also had 1813 level on our chart, which was already there. So what market did? Market went higher, just it was reaching 1800, and I posted that stop loss collection is happening. Why? Because this was again kind of equal highs. That means the market was collecting stop losses, and in that process it became parabolic. This is where it became parabolic, right there. And in our FCP room as well, we have been monitoring this, and actually one of our students was able to actually identify this in much in advance. I'll show you that in a second. So the market went higher right into this 200 moving average. I posted that, and it came and touched that 1813 level, and then we were expecting it to fall down. Okay, and I posted that you should be looking at 200 moving average, that in there. So on in our FCP room, so this is what we were expecting. So one of us was expecting market to move higher. Let me clean this up. He was expecting it to move higher into this 200 moving average, and the market started to move higher. I posted this, and it continued to go higher into 200 moving average, and then I posted that we were expecting a move down, like into 1800 or so. And this was the analysis, because we had this W pattern 200 moving average, and we went into right into 1806 level, and we were expecting market to fall down. So ultimately what happened? The market actually, let me go back. Okay, so the market actually did fall down, and it kind of hit the target that we were looking for, 1800, and it can continue to fall down even further, because our bearish is still our bias is still the bearish, and we still have this head and shoulders intact. So not much has changed, even though this was a very good move. But this is, remember, as I posted before, in the last days of this year, there can be moves like this, right? And if you are able to capitalize on them, that's very good, but you have to be extra safe. If you are not planning for them, if you're finding yourself lucky to be on the good side, then just be very careful, because the market can actually give you very easily, but it can take the profit from you very easily as well. So the market went lower, collected stop loss. It went higher, collected stop loss. So what do you expect? It is going to follow the higher time frame plan. So I'm still bearish on it, and if the market continues to fall down, the previous levels which were there acting as resistance or support, they are still in the play. So if the market continues to fall down, you see what has happened. The market came right into 1813 level. 1806 is like an important level. We have been monitoring this zone for a long period of time. It fell down, and it came into what? It came into 1798, sorry, 1796.236 level right there. So you see, these levels are still going to be acting as support and resistance. So the next level, if it continues to fall down, the next level I'm expecting is 1788, approximately there. And you follow exactly how the market plays out. If it continues to go higher, then I should be looking for 1813 as the first level, and then after that 1827, 1834, those sort of levels. And then after that, we are looking for 1844, 1853. So these are the levels which actually can be important levels for the gold in coming days. So if you enjoyed this analysis, make sure you hit the like button, share it with other traders and trading communities. And by the way, VATA Envisage, if you want to subscribe to that, then there are only few days left, because it is going away on December 31st. So if you want to subscribe to it, find a link below in this description, in the description of this video. Have a great trading week, and I'll see you in the next one. Thank you for watching. Find and follow us on these social media channels.